And it's 10 a.m. right here in Lagos, Nigeria. Good morning, good evening. Wherever in the world you're watching from, it's Business Morning live on Channels Television. I'm Ladi Williams. It's great to have you join us. And it's 7 days to the January 31st deadline set by the Central Bank of Nigeria to stop the old 1,000 naira, 500 naira, and 200 naira notes from being legal tender. Do remember you can send us your experiences, how you've been able to, if you've been able to get the new notes, and if you're able to exchange your old notes for the new notes, you can send us an email at businessmorning@channelstv.com, and we'll share your experiences with the audience. Now, let's look at what's happening in the markets now. We'll see global oil prices. They rose this morning in early Asian trade. We see Brent there rose about 5 cents to $88.24 a barrel, while U.S. WTI intermediate crude, that rose about 13 cents to $81.05 per barrel. We'll drill down on the commodities market later on the show. And for soft grains, we see Arabic coffee futures and ice gain more than 2%. That was on Monday, extending the market's rebound from a 1.5-year low set earlier this month, while cocoa futures also rose. March Arabica coffee, the KCC one settled up 3.75% or 2.4% at $1.58 per ounce after setting a 2-week high of $1.59. And the maximum lending rate in the banking sector hit 29.13%, while savings account rates was at 4.13% as of the end of December 2022, according to figures obtained from the Central Bank of Nigeria. And the money market indicators show prime lending rate was at 13.85%, while interbank core rate was at 12%. Treasury bill rate was 4.535%, 1-month deposit rate 8.15%, while 3-month deposit rate was at 3.79%. The 6-month deposit rate was at 8.68%, while 12-month deposit rate was at 8.22%. According to the report, the policy interest rate determines the levels of the rest of the interest rates in the economy, since it's the price at which banks obtain money from the CBN. These banks will then offer financial products to MSMEs at an interest rate that is normally based on the policy rate. We'll keep tracking all of that. And also back here, the Federal Inland Revenue Service has announced that it received over 10 trillion naira in tax revenue in 2022. A new record is set in 2022. It's contained in the FIRS 2022 Performance Update report. The tax agency further says it has achieved 96.7% of its 10.44 trillion naira target for 2022, with collections made from oil and non-oil revenues. According to the report, the non-oil taxes contributed 59% of the total collection, while remittances from all taxes stood at 41%. All right, we'll take a break now. When we come back, we look at cybersecurity in Nigeria's banking sector. Why are some customers being debited illegally? That's our next conversation. Do stay with us. This is Business Morning. Welcome back. Now to our first conversation. A survey carried out by Augusto revealed that 59% of bank customers sampled indicated that they've fallen victim to fraud. According to the survey, 41% said their accounts hadn't been compromised. However, the remaining had been victims through phishing emails, data breaches, unauthorized access to accounts through USSD, and others. Joining us now is Mr. Abiodun Ejaware, Head Information and Technology Development Bank of Nigeria. Join us from our Abuja studio. Great to have you. Good morning.
Yeah, good morning, Ladi, and thank you for having me here today.
Fantastic. So, recently we've got some call-outs, of major banks by some customers on social media. Some of them claiming the recent one said about 4 million naira was wiped out of her account, and she said she doesn't know, how that happened, and the bank has said they do not also know how that happened, and they don't really have any responsibility with, returning, the said sum. So I'm wondering, is this a trend that we should be worried about, or is it just a blip?
Okay, so yes, I think it's a trend that we should be worried about. A lot more needs to be done around fraud and how we then manage fraud in the banking system. But I would also want to put this into context. We've seen over the years, especially last year, the volume of transactions that are being processed on the banking platforms have actually increased. Last year alone, NIPS brought out their report that as at November 2022, we had processed over 345 trillion naira worth of transactions on their instant payment platform, which, I mean, is that platform that moves money from one bank to another bank instantly. So it means that as we begin to grow and move customers to our digital platforms, transactions will grow, and then, yeah, frauds will happen. But interestingly, the ratio of fraudulent transactions have not drastically increased. It's just that because you are now doing more transactions on the digital platforms, then you also have more frauds happening. I mean, customers will not want to be part of the statistics of people who had been defrauded. Another thing to note is that, so last year, by half year of 2022, say on the same NIPS platform, the attempted fraud, which means customers actually lost value initially, but some were salvaged, was over 8 billion naira. Out of the 8 billion naira, 50% of that was salvaged, meaning another 50%, I mean, went to the winds. And you see fraudsters deploying different tactics just to ensure that where controls are put in place, they find ways to circumvent. But what I think needs to be done is for the banks to also look at, how do my customers behave on my platforms? And then what are the right things to do, instead of just saying that, okay, if you compromise your details, there is nothing I can do. So I think is that empathy for the customer that needs to happen, and it needs to reflect in everything that they are doing on their platforms and how they even manage fraud in its entirety.
But looking at the situation right now, so who's responsible really? Because obviously at the end of the day, some of these the deposits are insured. So shouldn't the customers be reimbursed?
Okay, so you would see in some other countries where if there is a fraud, the first thing to be done is that you give the customer back money, and then you go about investigating. Maybe it's a card chargeback fraud or whatever. And then when you resolve it, you get your own money as the financial institution. That is something that I think should begin to happen in Nigeria. Yes, customers have responsibilities in using the digital platforms for transactions. However, banks are the custodian of the funds, so they need to be a lot more creative in educating the customers, very importantly. So you see, customers who are new to the platform or who are not hygienic enough in the use of the platforms fall victim. So, for example, a lot of transactions that, frauds have happened, it's basically on mobile platforms and then on the web platform. Mobile platform meaning your mobile applications, which is on your phone. And then you have your web platforms, which you log in maybe through your computer or your handheld devices. The security of those devices is very critical for any customer, because if somebody has your phone, the person literally can own every bank account that you have. So how do you safeguard your phone? How do you ensure that there is no authorized access, even for your own, your relatives, people who are very close to you, you intrinsically you will trust. Once it comes to money, you don't know the pressure that the next person is going through. So you need to, not just your card, but your phone, because from your phone, a lot of transactions can be done, and also on the web platform too. That's the internet banking platform, a lot of transactions. Those two platforms are actually the platforms with the highest number of fraudulent cases. And then you have insider collusion. Yeah, it happens here and there, but I mean, except for maybe Q1 last year, where we had a big one, there hasn't been. Yes, they happen. Insider collusion, meaning people in the bank coming together to collude and then defraud a customer. But the major amount of frauds that we've experienced are on the mobile applications and on the web platform. So a lot of education needs to be done. A lot of tweaking needs to be done on the platforms to ensure that we build fraud scenarios in building the platforms. We have to build fraud. We have to build the likelihood that fraud can happen, but the customer experience still has to be great. So banks need to be creative and ingenious in creating platforms or having platforms where, yes, you can understand the behavior of your customer. If the customer, at a particular time in the month will not transact in a particular way, then you need to validate. You need to validate, and you need to validate in a way that makes the transactions seamless. So in a nutshell, education has to be done for the users of the platform. How do you safeguard your details? Radio jingles happen, you have newspaper adverts, you have all of that. But the banks have the responsibility to the customers. You are the one who you have their deposits. So you need to find ways to reach out to them, to let them know the right way to use their platforms. Right. And then also your platform has to be nimble and agile enough to ensure that you take the user behavior into consideration as they are transacting on your platform. Okay. So I think it's both ways. One, the user has responsibilities. Two, the banks also, because they are the ones who are warehousing your money for you to transact with. They also have the responsibility. But I think the banks have to now take a big step, because we need to instill confidence in the system. CBN is trying to make sure that most things are done electronically. It's cheaper for us as an economy. It makes it better for us to have insight and even make progress as an economy. But the banking system will need to come together and ensure that we take customers into considerations, even their flaws and the likely things that can happen to them. We can use technology to shape how they will behave and make sure that we display empathy in how they also transact.
And talking about users, of these platforms, what tips, do you have for, customers using, these platforms? I've heard some people, say that they would rather not have an ATM card. They don't want any internet banking access, to their account, so that there's no risk of them being hacked. Is that the way to go?
Well, I wouldn't suggest that, because if you then don't have any channel through which you can transact, you are just warehousing funds in your account. Then when you now need to transact, what do you do? Do you go into the banking, or that's applying pressure on the banks? No bank would want, a lot of customers coming to their banking halls. So I think the most appropriate way to have this done is, one, for example, I have my card. It's not linked to every account that I have with a particular bank. So I have, so you need to be creative as to what works for you. My card is linked to my current account. If I need to transact to a particular limit, I have that exposure. So it's taking personal responsibility of your funds. But to say you would now do away with the platforms totally, I think it's counterproductive, because they've been created to help you. So you need to find a creative way that will work for you. Then you also need to be security conscious. So keeping, even though security analysts will tell you that passwords are now useless, but at least ensure that you keep safe passwords. Ensure that you use biometric authentication as much as you can, because with that, you then don't have to fall prey to when somebody hacks your platform. ensure that multi-factor authentication is enabled, even if it's an option from your bank. For you, by default, you should take advantage of what multi-factor authentication brings on the digital platforms. It's very, very important. And then for when if you don't do huge transactions often, maybe you then need to talk to your bank and make sure that you have a limit set, after which you need some extra validations. So these are some of the creative things that, as a user of digital platforms from banks, you can have in place. It helps you safeguard your funds. It helps you sleep at night. And then another thing that customers should also take note and make sure that they do properly, it's your notification channels. So, for example, your SMS, which will come to your phone, email. Make sure that you have your functional phone numbers registered with the banks. And then if you change phone numbers for any reason, make sure that you do that update, because when transactions are going through, or maybe there is a second level authentication, and OTP, that's a one-time password that is going to be shared. It goes to your phone. Most banks today, if you're going to change your devices, they try to manage the risk, reduce how much transactions you can do instantly before they scale up. So it's good that, and then they would also pretty much share, details with you on your notifications channels. So your email address has to be the one that you're using. Your phone numbers, also the registered phone number has to be the one that you are with. That way, notifications, when they come to you, either it's an attempted fraud or you are trying to do transactions, you're able to do them.
All right. So, we've heard of, some customer accounts, being compromised. And, sometimes the banks say they don't know where these funds, are going to. So I'm wondering, do the banks really not know, where these funds go to? Is there no way to, trace these funds? Because it's within the system.
Yeah, like you rightly said, is within the system. So if I bank with Bank A, for example, and the money leaves from my account to another account in Bank A, it's still within the system. You can trace it until the money leaves that other account where the transfer was done to from my account, maybe through cash withdrawal or POS or whatever. So that way, that's a then, because beyond that, you really can't trace that. But if it's transferred from one account to the other, then pretty much you can trace it, even if it's outside your bank. So if an instant transfer happens from a bank A to another account in Bank B, Bank A knows which account it was transferred to. Bank B knows which account did I receive money from, and all of these they can actually. So it takes effort, but I think for the customer's sake, it's also something that needs to be done. But once the money leaves the banking system, it's been converted to maybe cash, or it's been converted to a service, then it becomes a lot more difficult to trace. But that's in itself is a criminal offense, and then it can be escalated to the to the police or any other person who can trace for that. But as long as the money is in the banking system, yes, you can trace.
All right. I want to thank you so much, Mr. Abiodun Ijawari, Head IT Development Bank of Nigeria. We do hope, customers don't, magically lose funds, anymore in this system. Thank you so much.
Yeah, thank you so much, Ladi. Thank you for having me here.
All right. So after the break, commodities market update is next. Do stay with us. This is Business Morning. Welcome back. Still watching Business Morning live on Channels Television. Now for the commodities market update, we have Dr. Adeshola Simoni, Senior Associate Financial Directors Company. Join us via Zoom. Great to have you on the show. Good morning.
Good morning, Ladi. Thank you for having me on the show.
Yeah, so it's rate setting season, right now. And obviously, we know the central bank, MPC, started their meeting yesterday. Today, we're going to have a decision. What are you expecting?
Thank you for that question, Ladi. So this is the first meeting of the MPC this year, and it's also the last meeting before the general election. So it's quite significant, right? And the MPC, they are meeting against a backdrop of, in the domestic economy, high inflation. Inflation as of December was still at 21.3%. They're meeting against the backdrop of slowing growth. Q3 GDP growth rate slowed to, I think, 2.3%, down from around 3% in Q2. They are meeting against a backdrop of tighter financial conditions in the domestic economy. On the global scale as well, they're meeting against a backdrop of uncertainty in terms of global economic growth. The IMF has forecast that about a third of countries would experience a recession in 2023. They're meeting against a backdrop of global inflation, still relatively high global inflation, still relatively high interest rates in the global economy, as well as tighter financial conditions. So back to Nigeria, what do I expect? Well, we expect that the central bank, we expect that it's likely that the Monetary Policy Committee would hold all interest rates, all monetary policy parameters unchanged at this meeting. However, some other analysts still forecast that, I would see a 50 basis point increase in monetary policy rates, given, and they argue that inflation is still high, at 21.3%, and what else? And they're trying to bring it down because inflation is high and it's still more than double the central bank's upper bound. But we think that the softening of inflation in December, coming from a 17-year high in November, and after it had increased consistently for 10 months, I think that would give the central bank some form of succor. Also, globally, we are seeing inflation begin to decelerate, and as a result of that, we are seeing also some central banks begin to not pause their hiking cycle, but begin to slower the pace of increasing monetary policy rate. Also, if you look at Nigeria, the past 4 monetary policy meetings, we saw consistent rate increase, which is one of the most aggressive we've seen in many, many years. As a matter of fact, last year, the central bank increased monetary policy rate by around 500 basis points, with the most recent one in November, increasing by 100 basis points. So I think the central bank will want to pause a little bit at this meeting to kind of let the effect of the previous hikes in monetary policy parameters filter through the economy.
And talking about that inflation tapering month on month, do you think would you say inflation has peaked at this point? And obviously, we had the cues in December. People were buying PMS at crazy prices, and I'm sure that's supposed to play into the inflation data. Or do we expect some kind of lag effect for that?
Yes. So essentially, I'll say it is too soon to say whether inflation has peaked or not. I mean, for the past 10 months, we saw inflation rising consistently up until, I think, 21.47% in November, and then it eased marginally in December. So I think it's a bit too soon to say, oh, inflation has peaked. Also, you said the inflation fuel queues in December were quite a lot, and that's going to play into inflation numbers for January. Even up until January, I'm hearing that there's still a lot of fuel queues. In fact, I just saw the headlines this morning that diesel prices increased around 189% in 2022, with diesel being as high as 850 naira per liter in January. So I think we might still see some uptick in inflation. Also note that even though the inflation numbers for December decelerated, core inflation, which is simply headline inflation less seasonality, inched upwards, which indicates that some of the key drivers of inflation are still very, very much present.
Exactly. And obviously we have the U.S. Fed. They're having their meeting at the end of the month into February. Obviously, the debates out there, they're going to be hawkish or dovish, but it seems dovish is the consensus at this time.
It's quite interesting, like you said, like you mentioned, there is a debate between market economists and U.S. Fed officials. So the market economists think that the market conditions support a more dovish stance. We've seen inflation, for instance, in the U.S. decelerate consistently for around 6 months. with the most recent one being a deceleration to 6.5% in December. So market economists expect that, U.S. interest rates would not increase much more than the current levels of 4.5%. But some Fed officials still expect, some more tightening, and they see interest rates peaking at around above 5%. So there's this debate. But overall, I think the consensus is that the market conditions support slowing the pace of increases. So we are expecting that instead of 50 basis points increase or 75 basis points increases that we have seen last year, we expect that this meeting a softer increase around 25 basis points in the US. And other central banks too are likely going to take a cue from that. For example, the Bank of England in its next meeting is expected to increase interest rate by around 50 basis points, as well as the ECB. But I think going forward, we are likely to see a slower pace of increases. But one thing is clear, Ladi, that even though we are seeing inflation decelerate, it is still a far cry from the long-run inflation target of 2%. At 6.5%, US inflation is still significantly higher than, the long-run target inflation of 2%. So monetary policy would need to be restrictive for longer to be able to really bring inflation under control. In addition to all of this, Ladi, we are also seeing some economists that have believed that maybe that some of the factors driving inflation lower is that supply bottlenecks are easing rather than only the effect of monetary policy. So there's all of these factors playing at the moment. But one thing is clear, like the monetary policy needs to be restrictive for longer in order to bring inflation down more substantially.
Because when I look at the central banks, global central banks and their targets, for inflation, it seems, so far away, and it seems like a really painful process, to actually get to those targets. But now we've seen, switching over to the oil markets now, we're seeing some, there's still volatility in that market, but natural gas prices, it broke a key level below that $3 mark. Quite interesting.
Interesting. So you asked two questions in there. So let me start with the first one, oil prices. So at the moment, two big factors driving oil prices. Number one is China. Number two is Russia. So in terms of China, like two weeks ago, China opened up its economy. They just threw away, their zero COVID policy. And we've seen some economic activity. We've seen some more travel. We've seen demand. And the market is quite excited that, this opening of China is going to increase, first of all, demand for oil within the country, but also use demand for oil within the country, but also demand globally more imports, because China, like I've always said, China is the second largest importer of crude oil globally and the second largest user of crude oil. So there's that optimism. Even the International Energy Association, IEA, forecasts that China's reopening would have some big effect on oil demand going forward in 2023. On the other hand, we have Russia. And what is going on with Russia? The idea is simply the price caps of Russia, the price caps imposed on Russia by the G7, the EU, is going to take effect, is beginning to take effect. So we are likely to see some supply restrictions coming out from Russia due to the price cap. So these factors are likely to push prices, keep oil prices elevated in the near term. Some analysts forecast that we're likely to see $100 oil again, or that oil prices are likely to range between $90 to $100 in the near term.
Obviously, I know risk investors want to see these prices, still going down so they can enjoy the gains in those other risk assets at this time. But thank you so much, Dr. Adesola Sumoni. That's a head and senior analyst there at Financial Derivatives Company. Thank you so much. Thank you.
Thank you for having me.
All right. Got a little tongue twist there. Well, so we've been looking at commodities market there. So we have the NGX now. Head on to see how the markets closed yesterday. We got that positive close for the first trading day yesterday. Not bad. Niti has the details now. 0.12%, 52,600. Not looking bad at all.
Good morning, Ladi.
Morning.
Yeah, I told you my crystal ball never lies. So But what you saw in the market, which will be showing you on the screen, it was largely due to the likes of GTCO and Zenith Bank. GTCO, of course, is one of the top 10 most capitalized equity on the Nigerian Exchange Limited. But at the same time, Geregu also added to the market's shine, which is a pickup from what we had on Friday, was a mildly negative close. So now it's also
good way to start the week, though.
Yeah, very good.
Hope it continues and hope it's convincing.
Yeah. You know, and of course, it's coming on the day. Today is a decision day for the Monetary Policy Committee.
Right.
So we'll see how the market.
And we're going to have that decision earlier than normal. Do you think investors will have time to react to that?
Well, 12 p.m. is the time that the meeting will begin, which is just about an hour plus from now. So we'll be looking at how that will affect the equities market. But don't forget that the last MPC meeting in November, the market defied
with 500 basis points.
Yeah, 500 basis points all through the month of November down into the month of December.
Right.
But let's see if it's going to be able to repeat that, particular what it did last time. Now, so our market, the equities market, the local domestic stock market is up again in the green, 0.12%, which is what you call at about the 35 billion naira increase in terms of naira or in valuation term. So now the market is still climbing deeper into the 28 trillion naira level, 28.681 trillion naira. That's the current stand, and still climbing higher, 52,657.69 points. That's the index points, and one of very, very high, if you ask me, particularly when you look at the month of January. Normally it's a month of pullback. At the same time, inflation numbers, at the same time, the upcoming elections, so there should be some fears, but at the same time now, the market is rather defying all of the odds. Now take a look at the consumer, the sectoral performance. Green arrows, green color all the way, except for the industrial goods sector, which was largely muted. And that's because the likes of Dangote Cement, the likes of Bua Cement, they were all unchanged. They didn't move in price. Now, for tomorrow, the exchange will be having its the market review for 2022, as well as the outlook for 2023. Is going to be a virtual meeting, so they'll be giving us what to expect, or investors, the investing public, what to expect for the market performance for the month, for the year 2023. But so far, the month year-to-date gain, it stands at 2.74%, and of course, we're still expecting that the market, it will climb higher. Last year, Nigeria's stock market was number 4 in terms of the return on investment, number 4 best around the world. So that market is still climbing high. So we'll be talking to a research analyst at Merstem Securities to give us more details about the market. Now, but before we go there, take a look at the activity chart. The activity chart, it was down for the volume. Volume was down 67.61%. Value was up 31.55%, while deals was up by 5.44%. Now, let's talk to our analyst at Merstem Securities, Praise Ihaseke. She's the deputy team lead, Merstem Research. Thank you for joining us, Praise.
Looking in here, it's okay.
Hello, good morning. Thank you for having me.
Okay. Now, Praise, it's a decision day for the Central Bank's Monetary Policy Committee, and that's the first meeting for 2023. At the same time, for the fixed income market, according to what I have here, my analysis says the bonds market, it closed Monday, the first trading session, the first trading day for the last full trading week of January. Bonds were down, bonds were up, treasury bills was muted, while the OMO segment average yield was flat. Now, what are you expecting from the MPC as we speak?
Okay, yes, so I mean, a lot of us are still expecting that the MPC will continue to hike its monetary policy committee rate. The monetary policy rates by, we are still expecting a hike, given that the fact that the committee, changed their stance in, from January. I think March last year, and we started to combat inflation. And the factors that are affecting inflation are still very much prevalent. Of course, we expect the committee to recognize the disinflation that was recorded in December 2022, but this will not really deter the committee from continuing its monetary policy, its hawkish stance. So we still expect a hike for this for the meeting that's going to be announced, so the rate that's going to be announced today. Of course, we don't expect it to be as as hawkish or as aggressive as it used to be last year. So we have a band of 50 to 100 basis points hike in the monetary policy committee rates for today.
Okay, so now I'm going to the equities market now. We saw the equities markets. I mentioned earlier with my colleague Ladi that the markets had defied the rates hike announced in November last year. Now, do you see the equities market repeating this? And then, if there's a rate hike, how is that expected to affect other markets, the bonds market, the treasury bills market, the OMO market, and how do you think investors will be reacting to this?
Well, of course, a lot of investors are already expecting this increase in the monetary policy rate. So there's a possibility that the markets would still defy that hike. There's a possibility that we expect the market to have a positive close this week. We expect the market, to trade on a positive. However, looking at technical indicators and looking at some other factors that might affect, market activity, there's this indication that the market is in the overbought region. So there's definitely a possibility that we'll still see some selling action in the market. Of course, for the treasury bills, the bonds auctions, for a lot of investors are actually waiting for the results of the first bond auction that would occur. Looking at the fact that there is more on offer this time around, even both treasury bills and bonds, there is more on offer for the next auction than there used to be. So we're seeing that for the treasury bill market, for the treasury bill auction auction that's going to be on for tomorrow, there's this expectation of what the treasury bills, what the investors are going to do. So we expect investors to continue to watch that market. For like yesterday, now the treasury bills yields increased, meanwhile bonds auction declined yesterday. So from our conversations with traders and our watching of the market, there's this anticipation on waiting for when the next bond auctions will be, to see what the secondary markets would do. Of course, investors are also going to continue to demand higher rates, given that the real rate of return is in negative region. And then if the monetary policy committee hikes its rates as we expect, there's also still that agitation for increase in fixed income rates also. So playing in all this, adding all these things together, on the general, we expect a gradual uptick in the rates. Also, given that the amount on the auctions is higher than, significantly higher than previous auctions.
Thank you, Praise. Of course, our attention and the rest of investors, the investing public, they will keep their eyes on the MPC meetings currently just about to get underway. Thank you for your time on our show. So that was Praise Ihaseke, Deputy Team Lead at Meristem Research. So, Ladi, I don't know what your take is on this MPC meeting. Right. Do you see the MPC hiking the rates?
Yeah, but obviously not as hawkish.
I don't see a rate hike.
You don't see a rate hike?
I don't see a rate hike.
We'll see, and we'll see other important announcements that come, from that meeting. Thank you so much, Anita. All right, so we'll take a break now. When we come back, we head on to Juliana. Just stay with us. Now, we know the Nigeria-Japan Business Forum still holding right there in Tokyo, Japan, and we have Juliana on ground there, covering the event. But this morning, we're going to be speaking to a delegate right there at the event, Ambassador Akinremi Bolaji, Director, Economic Trade and Investment, Ministry of Foreign Affairs, join us from Tokyo. Great to have you on the show.
Good to have you, Laddie. Thanks so much.
So I know the event proper kicks off tomorrow, and obviously a lot of conversations are definitely in the pipeline there. But you know, from your view, what is the significance, you know, of this event, and what can we expect?
Well, thank you so much. Our delegations are already on ground from both public and private sector, and I must tell you, Japan is kicking off with us this year from the Ministry of Foreign Affairs, and we must commend the Nigerian ambassador to Japan and the Japanese ambassador to Nigeria for making this to happen. You've asked about what is going to happen here. For us to make this the first event of the year, you must know it's very important to us. We have a very good delegation from both public and private sector. NASIMA is here, National Planning Commission is there, and I must tell you that the Japanese authority are equally expecting us. And so we've been having some sideline meetings with a lot of business concerns here in Tokyo.
And what kind of investment announcements can we expect, you know, partnerships at the end of the event? You can give us a teaser of what to expect.
Is Channels Television, your home for the news. Please stay tuned for more on the President's state visit to Lagos, as we now bring you a live coverage of the commissioning of the J.K. Randall Center for Yoruba Culture, located in the Marina area of Lagos.